So hi, my name is Dan Deppen, and in this video I'm going to talk a little bit about what we do at Fusion Notes. So first of all, who am I? I'm the managing member of Fusion Notes. I'm a full-time note investor, so I've been full-time since August of 2018, but buying residential debt for the last couple of years. Some of my professional background, spent many years in the aerospace industry as a mechanical design engineer, then later did my MBA at the University of Colorado before focusing in on real estate and investments. So what does Fusion Notes do specifically? So we're a Colorado-based real estate investing company, founded in early 2017, and our main focus is buying and selling primarily non-performing mortgage notes, but also performing notes as well. And we buy these directly from banks and hedge funds, typically at significant discounts. And to date have purchased over 40 notes in this entity with plans to scale this up as time goes on. So our sole focus here in this business is buying distressed banks or distressed debt from banks and hedge funds at large discounts. So not looking at other types of real estate investing, really focused in this one main area. So to some people that concept is new, but basically when you're buying debt from a bank, then you are in the process of becoming the bank. Um, to date, we've focused only on first liens on owner-occupied assets. There's some advantages to doing owner-occupied assets, which I'll talk about in a little bit. We do buy in most states across the country, although our primary focus has been in Michigan, Indiana, and Ohio, and then also looking now more into Florida and some of the markets in the Midwest. The assets that we focus on are in value range of 35,000 to 200,000, and I'll talk a little bit more later about why we focus in on that specific range. So these are not, large loans on McMansions. These tend to be homes in the Midwest and actually typically more often in the sub 100K value range. So what we aren't. So as I said, we focus on first residential liens. So we don't do wholesaling. We're not fix and flippers. We're not looking to be landlords, although in some cases we do, when we do take homes back, we end up turning them into turnkey rentals. We're absolutely not joker brokers. So it's very common in this industry for folks to get a hold of a tape of assets, pretend they own it, and then build these daisy chains. We don't do that. We're buying for our own portfolio at all times, and also not looking to deal with joker brokers. That's why I said we're buying directly from hedge funds and from banks. Do have a wide network of other note investors, and we will occasionally work together with them to team up and take down larger pools of assets. But at the end of the day, we're always buying for our own portfolio. So our in-house team. So myself, I do most of the day-to-day work, finding sources of notes, working with the banks and hedge funds, and a lot of the back-end processes and investor relations. Also have Sarah Byrne, who's our portfolio manager and has a background as a paralegal. So she's really the one who makes a lot of this work on a day-to-day basis, handling the back-end processes, making sure that taxes are paid on the assets, making sure insurance is taken care of, doing a lot of dealing with the vendors, a lot of the documentation generation, and other things. Really the thing that's allowing this business to really scale up. And then Emma Deppen, who's my daughter and our official marketing assistant. So she helps me with various odds and ends where she can. And then Debbie Mullins, who handles the accounting and bookkeeping. She doesn't work directly for Fusion Notes. She works on a contract basis. However, as you have 40 plus note deals, many of them done with partners, it's very, very critical to keep all of your accounting and your bookkeeping in line. And she brings very deep experience working with a lot of very experienced note investors and understands how to set up QuickBooks and handle accounting for a notes-based business, especially ones with partners. So our preferred vendors, we have a number of vendors that we work with. These are just some of the key ones. So Allied for a lot of the servicing, although we also work with folks like Madison Management and Essence Servicing and Main Street. Pro Title USA handles all the title work and O&E reports, which is obviously very critical to make sure that when we buy loans, we can get clean title. Laughlin, who helps with the entity setup and structuring. Singer Law Group, who does a lot of the vendor outreach and loss mitigation. Ross Diversified for insurance. And then Satil and Bareilly, who handle a lot of our foreclosure cases in Michigan, Indiana, and Ohio. And there are many other vendors as well. Can't quite list them all here. And then we also have what I consider our extended team. So I'm also a member of Scott Carson's Note Mastermind group. And so with that comes a very wide network of other very active note investors. So that comes in handy when it comes time to, if you need a vendor in a new market, or run into a situation where there's a question or something that's new. It's really great to leverage this network, and also occasionally team up to take down pools of assets as well. So it's a way to expand our buying power and kind of move up the food chain in sourcing. So now drilling into more of our specific deal focus. So I mentioned that we're focused on properties with values between 35K to 200K. The reason for that range is we really don't want to go lower than that, even though there are a lot of properties you can find in the 20K and below range, because if you do end up taking those back in a foreclosure, you're just going to have fewer problems if you maintain that minimum threshold on the value. Likewise, on the high side, if you start getting into higher property values, you sometimes run into borrowers who have the sophistication and the means and the friends to potentially drag out foreclosures or contest them and really make the timeline longer. So this value range is really kind of the sweet spot that works well for us. We also avoid long foreclosure markets, so don't go in places like New York and New Jersey or Cook County in Illinois, where things can drag out for years sometimes. Do work in states that have judicial foreclosures that might take 12 months, but we stay away from some of those markets that can be the really ultra long foreclosures. Tend to focus on owner-occupied assets with a payment history. And the reason for that is if you have something that's owner-occupied and there have been some payments in the last 12 months, then those are some strong indications that you're going to get a better probability of rehabilitating the borrower and getting that loan performing again, which is always the best of the exits. So we don't do the borrower outreach ourselves. That's where we use our vendors like Singer Law Group or Polaris Counselors to try to work with the borrower, come up with an agreement that works for everyone, and see if we can't get the loan back on track. If that doesn't work, then we will offer cash for keys or a deed in lieu, where especially if the home is underwater, we can do the borrower a favor by just basically taking it back and forgiving the rest of the loan, and then often giving them some cash for moving expenses. And if all else fails, the last option is to proceed with the foreclosure. And I will mention too that some note buyers will buy a note, try to work it out, and if they can't, they won't foreclose. They'll just pass on the note to someone else. When we pick up notes, we want to make sure that we don't pick up anything that we're not actually willing to follow through on the foreclosure and take the property back. So if we do that, we'll price the asset to sell, try to turn it quickly, not really looking to be rehabbers or rental folks, although we do end up doing that on occasion, depending on the situation. It's not necessarily the baseline plan. So now I'm going to give some deal examples that we've had. So this is a note that's been reperforming. So this is one in Dayton, Ohio. So bought this last year. Unpaid balance a little over $29,000, paid a little over $15,000. So basically pay a little bit in excess of 50 cents on the dollar. Has a P&I payment of $400. And our borrower outreach was successful. We're able to negotiate with the borrower and work out a trial payment plan with the forbearance agreement, which they've since been executing on for about this last 6 or 7 months. So this one has really been tracking quite nicely, and it's currently yielding about 25%. If they continue and not just complete the trial payment plan, but stay on track for about 12 months of seasoning, then we'll actually be able to resell the note for probably 75 cents on the dollar, which will actually boost the total return above that 25% yield that we're currently seeing. Here's one where the borrower outreach was not successful and ended up doing a forfeiture on a contract for deed. So this is one that's currently an REO property that we're in the process of getting ready to sell. We actually bought this note for a little under $15,000. Between the legal costs and the cleanout costs, which were actually much higher than originally anticipated. They were not quite full on hoarders, but they left a lot of junk. Um, they also left some of the utilities running for about the last month, and there's about an $800 utility bill. But even with all of that, our total cost basis was actually under $25,000, and the BPO value on the home is $60,000, and the home is in good shape. So we'll see where this sells for and what we net after all the selling costs, but I would expect that to be in excess of $50,000 till we're all said and done. So this one, even though unfortunately we weren't able to work things out with the borrower, really hit a home run with this one from a return standpoint. So here's an example of one that sold at foreclosure auction, and this one is kind of more of a, not a home run, but more of like a bunt single, but still a very good deal. So this one was in Dayton, Ohio. Paid $75,000 for the note. Owed some back taxes, had some other costs. This was one we actually picked up after the foreclosure was in process from the seller of the note. So not generally our typical deal where we try to rehab the borrower. We kind of knew this one was going through foreclosure, but basically bought this note, held it through completed the foreclosure process, and then ended up selling at foreclosure auction for $86,000. So, small win here, but not a bad return considering the total timeline is about 5 months. And there was actually more upside as well. I was a little disappointed in where that sold at the foreclosure auction. I thought that might have gone for more, but it didn't. Another reperforming note. This is another interesting case. I've had a couple like this, which I actually refer to as the magically reperforming note. So this was one bought in Toledo, Ohio. Unpaid balance of $21,500. Paid a little under $13,000 for the note. This is one that had a number of payments in the last 12 months, but was running a few months behind, and a P&I of 384. So after buying this note, started the servicing transfer. The servicing transfer can take a month or sometimes up to 2 months in some cases. And the borrower received the hello and goodbye letter from the servicers and then called in to the new servicer and got my contact information and gave me a call. I don't generally deal directly with borrowers, but I will if they call me directly. Borrower expressed that they were really interested in getting caught up, staying on track. They wanted to make sure nothing fell through the cracks in the servicing transfer, and that we weren't just going to immediately begin a forfeiture process on the CFD. Explained to her that that's not how we work, and the borrower since has gotten caught up basically on their own. Didn't even have to use the borrower outreach people. And they also mentioned that they had put a new roof on the house very recently, and they were determined to stay on track. And also sent me these updated pictures of the home. So they don't all work out like this, but this was a really nice scenario. And now if that continues to pay, that'll be yielding in excess of 30%. And then if we can hold this for 12 months or receive 12 months of payments, we'll be able to sell this note at about 75% of the balance that we have at the time. So that one, definitely a big winner, although they don't all go like that. So more of an overview of some of the markets we work in. I mentioned that the majority of what we have is in Michigan, Indiana, and Ohio. That's partially because there's a lot of good supply there. That's also partially because we have some good attorneys like Satil and Burley who handle our cases there. Although we also buy in other places a little bit more opportunistically. Although in the future, I think we'll see a little bit more of a focus too on Iowa, Kansas, and some of those areas as well. So just a little sampling of our portfolio to get an idea of what these homes look like. Like I said, they're primarily sub 100K homes in the Midwest. This is not the entire portfolio, but just wanted to show some of them to give you kind of a flavor of what a lot of these properties look like. And as you can see, tend to try to key in on properties that have some pride of ownership and look to be in good condition. One of the things with notes is because you're buying the note, not the loan, you can't do an interior inspection. So you look very closely at what's going on at the outside of the home because that often provides clues to what's going on the inside. So 6 important things here to keep in mind. So generally when we buy notes, except for a few corner cases like the one I showed, our number one goal is to rehab the borrower. Really not looking to take a bunch of properties back in foreclosure and having a portfolio of REOs. We're always willing to do that, but generally we like to try to see what we can do to work with the borrower to get things reperforming. We have the advantage of buying these loans at large discounts, so we have a lot of flexibility. And basically, if a borrower really wants to stay in the home and make things work, then usually we can always work something out with them. We only buy first liens, have on residential properties, have nothing against second liens, have nothing against commercial loans, just not what we currently do. Don't have models together for that. And we're always buying below market values, so 70% or less, and typically, oftentimes 50% or less. We do have vendors review our files and the title work, we rely on folks like Pro Title to pull the title work, and then also rely on attorneys to review the files. So one of the things we do when I get a bid accepted on a note is I will review the collateral files myself and go through them and look for chain of title issues, make sure all the paperwork's in order. But then as an insurance policy, I always get a second set of eyes. So I always have a attorney, in addition to that, go through the files and check everything to make sure that the chain of title is clear, that any liens that might be on there are well understood and can be taken care of. And then our vendors handle the servicing and foreclosure. So you never, ever, ever want to try to self-service a note. That's what we have vendors for. And then we have very good foreclosure attorneys in all of our key states that if we do have to go through the foreclosure process, they know how to handle that. We also make sure we have forced place insurance on all assets. So if the borrower doesn't provide proof of insurance, then we put insurance on there so that we are always covered in that way. So what are we looking for at Fusion Notes? And a lot of that is potential partners. So we have a number of folks we work with. We have folks that we partner with to help take down and buy pools of notes. We also have other partners who fund deals and that we work with in other ways. So the partners often come to these deals using either cash or money in savings, and more often than not, self-directed IRA accounts. And so these are typically folks who have a background in real estate investments, who are trying to look for some better returns than what they can get on maybe their fix and flips or rentals or other things. There are a lot of tired landlords who come to this business. So one of the advantages of a note is that you don't have toilets and tenants, although you do occasionally get REO properties. Sometimes it's REO investors who are having trouble finding deals, fix and flippers who are tired of flipping, or more often than not, just folks who have money in retirement accounts that are earning zero or very small percentages that are looking to put that to work. Or some people come to it from the angle that I did, where they're folks who have a background in primarily the stock market and maybe options, but are uncomfortable with some of the high levels that the stock market is at currently, and have maybe experienced some of the dips and dives over the years between the dot-com crash and the financial crisis. So, I'd like to continue the conversation from here, talk to you and discuss some of your goals and expectations, and fully understand that not everyone is a fit for notes. So always happy to talk to everyone, but sometimes you find out that this particular business is not necessarily the best fit for them. You can definitely get larger returns in some cases than you can from other investments, but these things also have a lot of other moving parts. You don't know going into it whether you're going to be able to rehab the borrower or whether you're going to end up going through a foreclosure. And then when you do take homes back, you don't know necessarily always what you're going to find because you can't look on the inside. So there are always a lot of unknowns and a lot of twists and turns. To me, it's a very fun business. It's a very interesting and profitable business, but there's just a lot of uncertainty and moving parts, and that's not something that's for everyone, and that's totally fine. Can discuss some of the things that we're working on now and some of the available opportunities. And generally, these are just quick calls, 15, 20 minutes. And you can just reach out to me at dan@fusionnotes.com or give me a call or send me a text at my cell number here. So anyways, thank you for listening. Look forward to talking more soon.